In a world of fluctuating markets, knowledge is your best ally. Are you ready to take control?
Absolutely. Join our panel of experts as they untangle the housing market crisis and gold's promising forecasts.
And the best part? We've streamlined their insights into essential takeaways that save you hours of research.
So let's dive into it. First, George Gammon reveals shocking trends in the housing market you must know.
Stay tuned as Gary Wagner and others share key predictions you won't want to miss.
Don't forget, this information is for educational purposes only, not investment advice.
Today, we're examining George Gammon's insights into the current crisis in the housing market.
George outlines critical factors such as soaring interest rates and a surge in housing inventory that are reshaping the landscape.
George Gammon identifies rising interest rates as a pivotal reason behind falling buyer affordability.
He adds that as more homes enter the market, the increased inventory could further dampen prices. Gammon explains that higher mortgage rates significantly restrict buyer purchasing power.
Indeed, this leads to a large portion of the population being priced out of the market. According to Gammon, there's a notable increase in housing inventory affecting market dynamics.
This greater supply pushes prices down as buyers have more options.
What predictions does George Gammon have for the future of the housing market?
Gammon suggests that there might be a significant price correction if these trends continue.
Gammon forecasts that if interest rates decrease substantially, we could see stabilization in housing prices.
However, ongoing economic shifts will continually influence buyer behavior.
In conclusion, George Gammon emphasizes the need for prospective buyers to stay informed about evolving interest rate trends.
He also suggests that those looking to invest should carefully consider the current market conditions.
Today, we're diving into Zillow's updated home price forecast for 2026, as discussed by housing expert Tim Ellis.
According to Tim, the forecast reveals several surprising trends that could impact the housing market significantly.
Tim Ellis predicts that after several years of volatility, home prices may stabilize over the next few years.
He suggests that various economic indicators are signaling a possible shift in buyer demand and behavior. Tim highlights that interest rates will play a pivotal role in determining home affordability moving forward.
Could that mean certain areas will see more demand than others?
Absolutely. Tim notes that regional market conditions may drive localized demand even amid broader economic trends.
What does Tim say about changing homebuyer behavior?
Tim observes that shifting demographics, particularly among younger buyers, are changing the landscape.
So remote work is influencing how buyers prioritize their home features.
Exactly. Tim indicates that preferences for home offices and access to outdoor spaces are increasingly important.
What is Zillow projecting for the home prices in 2026?
Tim predicts that home prices will stabilize, but the exact numbers will heavily depend on prevailing economic conditions.
And how will remote work play a role?
Tim believes that remote work will influence buyers to seek homes in different geographic areas than previously preferred.
Tim concludes by emphasizing that potential buyers should keep a close eye on interest rates and regional trends.
He also suggests that real estate investors need to adapt their strategies to these changing market conditions.
It's clear that understanding Zillow's forecast will be crucial for anyone looking to navigate the future housing market. Today, we're exploring gold market dynamics through the insights of Gary Wagner, a prominent market analyst.
Wagner's analysis focuses on why current overbought signals should not deter investors from considering gold.
Gary Wagner suggests that the traditional interpretation of overbought signals may be misleading.
He emphasizes that there are strong underlying factors contributing to gold's price support, indicating potential for further gains. According to Wagner, there is increasing investor sentiment towards gold, which supports its price stability.
This sentiment could be a crucial driver, as gold often acts as a safe haven. Wagner highlights that economic instability and inflation concerns are leading investors to seek the safety of gold.
Moreover, the weakening of fiat currencies is further enhancing gold's attractiveness. What does Gary Wagner predict for gold prices in the coming months?
Wagner remains bullish, predicting that gold prices could see significant growth even amid overbought signals. Gary Wagner predicts that gold will continue to rise as external economic pressures mount.
His confidence suggests that investors may benefit from holding gold in their portfolios.
Wagner advises investors to consider gold as a strategic asset in their portfolios.
He emphasizes monitoring economic indicators closely to capitalize on potential gold price movements.
Today, we're discussing insights from Graham Stephan on the alarming increase in tenants not paying rent.
Graham highlights that this trend significantly affects landlords and the rental market, so let's dive into the details.
Graham mentions that more tenants are defaulting on rent, putting significant financial strain on landlords.
This not only impacts landlords' finances, but also has a wider ripple effect on the rental market.
Graham points out that numerous tenants are facing job losses, complicating their ability to pay rent.
This situation illustrates the broader economic pressures influencing both tenants and landlords who depend on steady income.
As landlords deal with these ongoing challenges, Graham observes many are considering eviction processes.
However, he points out that it may be important for landlords to explore alternatives to mitigate losses before resorting to evictions.
Graham anticipates that as rental inventory increases, we may observe a downturn in rental prices.
Additionally, he notes that new regulations aimed at tenant protection could emerge, reshaping dynamics.
In closing, Graham advises landlords to proactively improve their tenant relationships and reevaluate their payment agreements.
Making rental terms more flexible may support tenants and balance the needs of both parties during tough times.
Today, we explore vital market insights shared by Chris Vermeulen.
Vermeulen's analysis reveals concerns indicating the market rally may be weakening.
Chris Vermeulen points out key indicators signaling a potential market downturn.
He mentions emerging bearish signs that could prompt significant declines. Vermeulen observes bearish signals in main indices, especially in tech.
This suggests waning support for the overall market. What is Chris Vermeulen's take on current investor sentiment?
Vermeulen highlights a movement toward caution among investors, favoring safer assets. Chris anticipates greater volatility as market conditions change.
What predictions does Chris Vermeulen forecast for the upcoming months?
Vermeulen forecasts potential price corrections as market conditions evolve.
Chris Vermeulen recommends that investors reassess their investment strategies.
He underscores the need to target sectors that could outperform in these uncertain times.
Today, we're analyzing the ongoing challenges in the automotive market, focusing on insights from Sam Williams and his conversation with Mike Turner.
Sam emphasizes the critical link between CarMax's performance and broader issues within the dealership sales network.
Sam Williams identifies critical factors influencing the automotive market, starting with changing consumer buying behavior.
He points out that challenging economic situations are making consumers hesitant to make large purchases like vehicles. Sam explains that many consumers are delaying car purchases due to economic uncertainty.
What is the impact on CarMax's sales inquiries?
Sales inquiries are down, leading to significantly lower sales numbers.
Sam notes that inflation is significantly impacting household budgets, which is reducing spending on automobiles.
This economic pressure results in extended sales cycles for dealerships, creating longer wait times for transactions.
What are Sam's predictions for the future of dealerships?
Sam suggests that dealerships must transition quickly, incorporating online sales models to accommodate shifting consumer preferences.
What insights does Sam offer about CarMax going forward?
Sam foresees that CarMax could continue to struggle without a significant focus on bolstering its digital sales approach.
In closing, Sam asserts that dealerships need to rethink their strategies based on evolving consumer behaviors.
He stresses that investing in online platforms and marketing will be essential for thriving amidst competition.
Wow, what a whirlwind of insights. We've really unpacked some fascinating topics today.
Absolutely. Sam Williams and the others provided perspectives that are critical in navigating these uncertain economic waters.
It's striking how everyone agrees that economic conditions are pivotal, regardless of whether we're talking auto sales, housing, or the gold market.
Right. But what's intriguing is the differences. We have Tim Ellis saying home prices will stabilize by 2026, while George Gammon suggests immediate challenges remain.
And let's not forget Graham's take on tenant defaults. It's a real dilemma for landlords, isn't it?
Definitely. Each guest brought unique challenges to light, compelling us to consider a mix of market behaviors and investment strategies.
If you've enjoyed these insights and want to dive deeper into these topics, please like and subscribe.
Your support means the world, and it helps us bring more expert analyses directly to you.
Join us next time for another exploration of market dynamics. This time, we'll tackle global trade and its ripple effects on investments. You won't want to miss it.